Hello everybody. So today I want to talk about Rivian, and I titled this video The Rivian Gamble because this is my conclusion. Rivian is a gamble. As a disclaimer, I'm not buying Rivian. I find it too risky for me, but I spent quite a bit of time thinking about this over the weekend, and so this is not advice. This is just a summary of my research on Rivian that I want to summarize here. Of course, why would Rivian be on my radar? Why would I look? Because the enterprise value of this company has gotten into such a dirt cheap territory at $5.5 billion. Keep in mind, this was a company that was over $100 billion in EV at some point. The stock is down 92.25%. Don't forget, if a stock is down 92%, it could be down 95% and 98% and 99%. That's not what I wish for Rivian. If anything, this stock, if this stock doesn't survive, it will be yet another victim of the high interest rates environment. It may be that this high interest rate environment might be the blessing of Tesla, because only Tesla has enough cash to survive this high interest rate environment. There's no doubt to me that's the main reason why they're failing is the high interest rates, because the demand for their cars is going down, and obviously it is, because the American car buyer is a monthly payment buyer, and with interest rates on cars today being high 9, low 8, high 9%, the payment on those cars is going to be just insane, and that's why the demand, even if a lease is like $700 a month, the demand is just not there for their cars, and it's a little depressing if you listen to the call like I have. They produced 57.3 thousand cars in 2023. This quarter, it seems like they have thousands of cars that have not been delivered for Rivian. From what I understand, about 4,000 cars have not been delivered yet. And the CEO was nice on the call, trying to say, well, there's life changes. Sometimes you get a divorce, etc., which you don't get the car. But, the truth is, if it was a Cybertruck, you would find a way to get the car. And if it's a Rivian, you're going to be like, yeah, I had it pre-order, but, I'm not taking a delivery because it's not the Cybertruck, in a way, or it's not as desirable of a vehicle, or it's not as new of a vehicle as it once was, as it was like a year ago. They've guided down, actually, for 2024, full year production in 2024, they've guided 57,000, and they produced 57.3, so they're going to produce less cars, and it's very obvious that the revenue will be down, because part of these cars will be the R2, the new car that they're introducing, but they also introduced a low, I'm going to call it a low-range version, even though they call it standard range. They introduced a low-range version that starts at $69,000 of their R1T, and hopefully they get a little bit of viral value, and they go viral by having it priced $69,000. I really hope that for them at this point, anything to drive the sales at this point, and so you might as well price your car $69,000 to try to get a little bit of a meme value online. Tesla should produce, to give you a sense of scale, Tesla is 108 times bigger in terms of EV than Rivian. So really, Tesla is the giant that sucks the air out of a room. Tesla is a black hole in the space, and to give you an idea of whether it's warranted or not, well, it's up to you to decide that. But Tesla should produce about 40 times more vehicles in 2024 than Rivian. So Tesla produces 40 times more vehicles, and it is 108 times bigger in terms of market cap. In my view, a lot of valuation of Tesla has to do with FSD and with some of the other projects that Tesla has, and Tesla Energy, and all of this, of course, is not in Rivian. Rivian is just the auto business. That's it. So revenue will be down for Rivian this year, because they'll likely rely on price cuts, likely on vehicle mix, and of course, this is a company that's suffering from now May rate cuts or June rate cuts. Like every extra month that we wait to cut the rates hurts a company like Rivian disproportionately bad, like disproportionately bad, because they are on a time crunch. They have a date that they're gonna run out of money, right? So they are in a hurry when it comes to the time, and so each month of early drop in interest rates is actually extremely more valuable to Rivian than it would be to Tesla. In a way, it's as well if you were Tesla, you would wish kind of the interest rate staying high for another year if you're Tesla, because then your competition has no shot. You're the only one who has a shot at ever surviving because you got all this cash. So anyways, what are we doing? Well, 10% of their workforce they're laying off, and they're doing also factory improvements for their new car that's coming up, and they're doing everything to get a flat gross margin or 1% gross margin. This is good. That would get them out of the loop of the more you sell, the more you lose, or the more you sell, the more you bleed cycle that, say, a company like a Lucid is experiencing. You would get out of this loop, or even Ford for their F-150 division is experiencing that. If you had 1% gross margin alone, you would get out of this loop. And so I really hope that they get there for them. But the question, this is what one analyst sounded skeptical in the call, and one analyst asked this. He was like, well, are you sure laying off 10,000 people is enough? He didn't phrase it like that, but that's what he meant. He meant, shouldn't you be laying off something like 25% and not 10%? And the CEO was like, well, it's tough to do a layoff. Well, yeah, it's tough to do a layoff because you hired the best. You tried your best to hire people, oftentimes young people who are excited, who pour their energy into a brand, and then you have to fire them. Yeah, layoffs are tough. And that's not the fault of Rivian. That's the fault of Jay Powell. Thank you, Jay Powell. They expect the capex. They expect the capex for them to be, and I use the word whopping not lightly, a whopping $1.75 billion, and their 2024 EBITDA to be negative $2.7 billion. So the cash burn is alive and well for this company. Crazy cash burn. I'm not sure they noticed that their sales are going to be down in 2024. I don't know. But to put this in perspective, let's put it in perspective. That's 32% of their market cap that they're going to spend in capex. So if this were Tesla, that would mean Tesla would be investing $190 billion this year. And we know Tesla as a share of EV is spending a lot, but it's a fraction of that, right? They may be spending up to 5% of their enterprise value. This company is spending 32% of its enterprise value. Wouldn't be nearly as shocking to spend this much money if you still were worth $100 billion. But, reality check Rivian. Rivian is not worth $100 billion anymore. So now it's an obscene amount of money to invest. And that's why I wonder if there needs to be some sort of a reality check. Is it wise to spend that much money in capex? Wouldn't it be wiser to cut all spending and buy yourself another year? Right? Because it's at this point is the case. You have 2 years runway or 3 years runway. What do? Do you stop all spending and buy yourself an extra year to leave the opportunity for rates to come down and for the sales of your expensive pickup truck to keep back up? Right? Doesn't seem to be the way they're going. And of course, who am I to judge? Because I don't have all of the information. I don't know anything about what the R2 is going to be. But my guess is that if they're investing this much money, they are very confident that they're going to sell a whole bunch of this R2 model, and that the demand for the R2 model is going to be through the roof. And the R2 is their next model that we don't know much about, but that is supposed to be a lower priced Model Y type of competitor. Well, first of all, trying to compete with the best-selling car in the world is a tough proposition. Trying to compete with Model Y is a tough proposition, especially when we know that a refreshed Model Y is coming. But the CEO must have incredible confidence in the R2. Is this the right strategy? I don't know. We can't know. We haven't seen the R2. The R2 is coming on March 7. Maybe when we see the R2, we'll think, oh my goodness, this was actually a great strategy. They're going to sell tons of this, but we don't know. I think if I had been then, I might have done something a la Enphase, which is don't touch the price, don't introduce the what they call the standard range version on their other vehicle. Just keep the expensive product, wait for rates to come down, and buy yourself an extra year, right? That capex that they're investing to roll out this vehicle, they could have saved it and bought themselves an extra year of guaranteed survival, because now they have about 2 years of guaranteed survival, right? Because you're investing so much money in the next year vehicle. 2 years of guaranteed survival, is that going to be enough? It all depends on Jay Powell, if you ask me. And then, of course, companies have options. They could do an equity raise or a debt raise. But at this point, raising more debt or issuing equity, that's definitely not going to be favorable for the stock price in any way. That's definitely going to hurt the current shareholders. It would be a complete mess. Imagine if Rivian did an equity raise at this price. That would be a complete mess. And the debt they would get, given how much debt they have compared to their EV, remember, the debt is always in relation to the market cap and in relation to the EV. Any debtors would consider extremely risky to raise debt right now. So this is not a company that is going to have any sort of favorable capital raise if they must do that, unless maybe Amazon gives them a quote-unquote sweetheart deal or something. Maybe Amazon steps in and puts more money, but it doesn't seem to be the case. If you follow Amazon seems to be diversifying. They're getting into robots, they're getting into this, into that. This might have been just one of the many investments of Amazon. Also, the trucks, those trucks that they deliver to Amazon, it's not expected to have any meaningful impact in 2024. They expect to maybe have a pickup in sales of those trucks in 2025 for other companies, but the trucks doesn't seem to be the thing that's going to save them. So anyways, it's a tough one. And what's going to happen? Well, in order for this gamble to work and for this company to go back to its old market cap days, or even double or triple the market cap, right? For this stock to be a triple or double, in my view, what must happen is that we must see a pickup in the demand for their products. The sales need to go back up. Now, they have something great going for them, which is the Rivian R1 reviews are generally amazingly positive. I don't know if you've seen them. They're amazingly positive. I can also tell you that I've seen a few Rivian pickup trucks when I drive around my Texas town here. They look really good. I mean, the Rivian R1 definitely is what we call a head turner, right? But so is this car coming up that I've never seen on the road yet, by the way. So is this car going to be a head turner, right? I also want to say another thing that's going for them is that in the US, you have a strong community of, outdoorsmen and all that sort of stuff. Maybe it's because I live in Texas. I don't know. But you have a very strong community of people who love these type of car and who have their identity tied to this type of car, and who's to develop the Jeep 2.0, the better Jeep? Well, to me, it seems like Rivian is that brand who want to develop that Jeep 2.0 in the USA, because of course Jeep is not working on anything. So there is a market for what they're doing here. I want to point that out. They've staked out a market in the marketplace, but the problem is that they must see a pickup in demand, and that pickup in demand might not happen right now, because the competition is finally here. Rivian is not the only option. Right now you have the Cybertruck. The Cybertruck is maybe, I don't know if you read the rumors, maybe at 100 a day is the factory what is ramped up. It's going to be quicker. They're going to produce more and more Cybertrucks. Cybertrucks have a wow factor too. And maybe it's got more of a wow factor than the Rivian. I don't know. I've never seen a wow factor. I've never seen a Cybertruck in real life, so I don't know. But it's gonna have a wow factor too. So now in that price range, you're gonna be competing against the Cybertruck, because the Rivian R1T, if you don't want to buy their promotional version with a cheap, inexpensive battery that's $69,000, if you don't want to buy that, still the standard R1T that the buyer who's interested in those reviews, the more interested buyer, that will be an $80,000 car. That's still about $80,000 to $90,000 is what the cost of an R1T is. And by the way, if you are price sensitive and you want to buy a truck, you're likely gonna buy the Lightning, because the Ford Lightning may not be a head turner at all. In fact, not much distinguishes from a regular F-150. But this is a dealership in my area with all of the incentives. This is what they show up for F-150 Lightning at $50,000, $300,000. And I just want to spend a second also talking about this. The F-150, you get a 98. This is a 98 kilowatt hour battery for $50,300. I mean, if you have bidirectional charging at your house, this is akin to buying a battery for your house that also happens to have an engine and also be a car and also be a truck. At this point, these trucks have such strong batteries that once you start getting to such low prices for this level of a battery, it's almost an investment. And I think we're gonna find very, very interesting economics things happening to the used car market, where really the value of the car retains much better its value after some point, because much of that value in that car is based on the battery and the usefulness of the battery. I mean, a 100 kilowatt battery in the F-150 for $50,000. Imagine how useful it is for anybody who has an off-grid type situation, off-grid type living, or some resiliency requirements. That's true for the R1T too. The R1T has a pretty darn big battery. These cars are very interesting because you're buying a battery plus a car. So anyways, this is more of a general discussion about the value of electric vehicles. Electric vehicles have a value that few people have begun to grasp. Those batteries are you're buying a bank, right? You're buying a bank for your house. You're buying a bank for your housing arrangement, and you're buying an energy storage tank. So this is fascinating too. Anyways, lots of competition coming for the trucks. That's point number one, the Rivian gamble. And let me conclude with that. Why would Rivian survive? Well, Rivian has a lot of reason why it would survive. First of all, as I said, the reviews are great on the cars. That's one thing they have going for them. Another thing they have going for them is they have vertical integration. They are trying to be as vertically integrated as possible, like a Tesla. They have a software focus, like a Tesla. They have a no dealership model, no dealership to mess up the end consumer sales anymore like anybody else. You don't have to deal with a dealership. There's a whole generation of people who don't want to buy at a dealership, and they will go to Rivian and they will go to Tesla. So that's the direct-to-consumer business model, which is a big, big deal. And they also have a catalyst for them. This is a strange catalyst, but I don't know if you know this. They only have about 10-ish places in the US where you can try that truck. And so there's a lot of expansion that they can do in their showrooms to try to sell the truck. They have a lot of expansion in their sales strategy. This is a company that now has to turn to sales strategy and actually selling the product, because the demand is not through the roof anymore for these products. It's not like every car we produce, we sell. So these are the catalysts, if you will, the reason why this stock could survive and even thrive, but the demand needs to pick up. To me, this is a gamble mostly based on the R2. What are going to be the pre-orders on the R2? The R2 needs to be an internet sensation. It needs to pick up right away when introduced on March 7. If the R2 is a failure, if people criticize it, if people are like, oh, why would I ever buy that? Then you'd be in deep trouble for this company. So the R2, they don't have a choice. They've kind of bet the company on it, and it needs to be a major success. And then I also think Rivian needs to partner with Tesla for FSD, because FSD, what's trending right now on all of the socials, right? It's FSD getting better, FSD getting better, FSD getting better. People are beginning to factor whether their cars are going to have FSD or not, and Rivian, in my view, would be very well informed to start license or announce that they'll start licensing FSD for their cars, because at some point a car that doesn't have FSD will be much less valuable than a car that has it. And the last point is, and I might concur with an analyst here, which is crazy because I usually don't concur with analysts. But maybe they should have more layoffs. Maybe they are being too optimistic about the demand. Maybe they're keeping more people than they need. And maybe don't forget, that's probably hopeful. The 57,000 cars in 2024. That's probably a hopeful number. So I think this is a company that grew too quickly, that hired too quickly, that invested too quickly, and there must be a little bit more quote unquote fat to trim than 10%. And I know it's terrible, and the CEO is a very nice guy. The CEO doesn't want to do that. I get that vibe. I get that the CEO absolutely doesn't want to do that. But unfortunately, I think we don't have the choice, and the blame, frankly, does not, in my view, does not belong in the CEO. The blame belongs on Jay Powell. This is what Jay Powell's trying to do. He's trying to ramp up layoffs. He's trying to make companies struggle so that we get an economic, hurt of some kind, so that we reduce inflation. CPI inflation. I think that's entirely ridiculous to do that, because you're hurting people in your own country much more than you're having an effect on inflation, because most of the inflation is imported. But nonetheless, I mean, companies need to realize that, the problem is, for that company in a lower interest rate environment would have had no problem having a greater valuation, doing a secondary capital raise, doing more raise of capital for their debt, selling more cars, and now the interest rates are really hurting these companies. And so, anyways, that's just a sad situation. Rivian is a gamble. It was a fascinating company to study. I don't like to see this situation, especially when you think about so many investors who lost money on this one. This is not investment advice. This is no financial advice. This is just entertainment. I hope you were entertained as much as I can. Please like, please subscribe. Thank you for watching, and have a wonderful day.